really good to see these really two global leading actually, healthcare companies, CSL working in biopharmaceutical field, as I was saying, in blood plasmas. They have a nice vaccine business in influenza, and they recently had added some things in kidney disease and in iron. And then we have Cochlear, which is a medical device company, obviously working in hearing implantation. We really could see really good results from both these names, really favorable outlooks. Really both seemingly turned the corner with their bout from long COVID. Any kind of COVID-related or pandemic-related challenges, good to see. We've made fairly nominal changes on our earnings forecasts for these names. We've kept our ad rating on both, really viewing both as really core investment holdings, should be in most clients, if not all client portfolios across this network. Now, all the nitty-gritty is detailed in those notes, so I'm not going to belabor that at all, but some highlights I will touch on each. CSL, very easy. It's all about blood plasma. With 70% of this company driven by what's the Behring division, really relies on blood plasma or the liquid gold that fuels 90% of that division's products. Only one needs to really look at is the really strong first half plasma collection number, up 36%. A really stellar number there, 10% above pre-pandemic levels as well. Impressive double-digit growth across all the products that are coming out of that plasma business as well. To understand things are really looking on the up for CSL. Now, questions do linger about the margins in that main division, the Behring division. The margins were down, gross profit was down 5.5%. That was really on inflationary pressures. We did have some high plasma collection costs as well, and some high price inventory, but costs seem to be moderating, which is good to see. In the half, plasma collection costs are 10% off their peak levels. The company is cycling through inventories that it collected 9 to 12 months ago, where that plasma level was much higher, or plasma costs, were much higher. So those are coming down, and management is confident on an improving margin outlook. Adding to this mix, we have Securus, which is their influenza vaccine business. That's kicking goals as well, up 9% in sales. Good strong number there, and no really issues or surprises with the newest addition, the newest kid on the block, the Vifor acquisition. Traded in line with expectations, put up 15% sales growth, which is great to see. Integration and synergies are all on track, so things are looking really good there. And let's not forget the R&D portfolio. Now, this is something or an area we don't really discuss, or you probably don't really realize about CSL, but you very will soon. It's in the best shape it has ever been in. There's no less than 14 new molecules or expanded indications coming through this pipeline over the next 5 years. One such as a newly launched Hemgenics, that was approved. It's going to recently be launched in the next couple of weeks here in the United States. This is a world's first one-shot and done hemophilia B gene therapy product. And then we also want to flag the second heart attack prevention med, CSL 112, which you probably know of or have heard of. That was delayed due to COVID, and that trial, 18,000 patient full trial, will report out in the early 2024 calendar year. So it shouldn't be any surprise the 23 guidance was reaffirmed, targeting 13-18% earnings uplift. We're forecasting a 16% CAGR over the next 3 years, so looking up for that. Stock has run up into the result. You can see, really nice to see that it broke through or cracked the 300 level. That's the first time it really sustainably did that in over a year's time. It is trading at 34.5 times forward. It's a tad below its 5-year average at 35.5. So it's really screen cheap. However, it is one of the best quality names across our space, and we believe it'll just grind higher with that good, strong earnings trajectory, and so it remains our key sector pick. Quickly turning now to Cochlear. Now, unlike CSL, Cochlear, it's all about, really enriching or improving the 500,000 cochlear implant install base it currently has. Nearly 60% of this company's sales or profit is actually driven from cochlear implants. So, putting up a first half unit growth number of 14%, best level we've seen in years. Double-digit growth across both developed and emerging markets is really going quite well. Notably, that result was driven by a new product launch, which launched actually late in the half, so we're in a new product life cycle right now, coupled with a really stable clinical capacity on the recovery out of COVID, from the COVID-19 surgery delays. Most countries are trading above pre-COVID levels, which is great to see. Trading conditions management pointed out have aggressively improved. They're confident in the opportunity in growing its markets. And they pointed out something really interesting that we all should know. Cochlear, market leader, 60% market share. But they believe the addressable market, they only have about 3%. So you can see there's a huge unmet medical need, significant addressable market here and expected to underpin the growth trajectory of this company going forward. But like CSL, Cochlear did have some margin headwinds. The operating margin was down 6 points, really due to investment in OpEx and kind of getting that new product launch. I'll give it to them. I mean, that's reasons to spend. But in a show of confidence, management did hold their dividend flat year on year, so held that, and they added a little bit of sweetener. They had pushed through a $200 million share buyback, which is nice to see. Guidance reaffirmed, up 10%, up to 10% in profit into next year. Implying a strong second half, up 25% at the midpoint of their guidance range. We forecast growth over the next 3 years of about 12%, looking good. So looking at the stock, it did surge up to a 6-month high off that result, and tends to screen cheap at the best of times. It's trading at 45 times forward earnings, but however, that is in line with this long-term multiple. And like CSL, it has a very strong earnings trajectory. We believe it will slowly just grind higher as our earnings kind of fall through and people come to recognize what's going on with Cochlear. So happy to be there, happy to have my ad rating.